Let's see if that straightens it out. Yeah, that looks like it's a step in the right direction. Sorry for the delay, everybody. Thanks for visiting the Trader Lab today. My name is Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is about integrating bookmap order flow tools with auction market theory and using a tool called the volume profile in the intraday developing time frame. Uh, this stream is for educational purposes. And the way this works, and what we have found, and I have found over many years of trading, is to use a consistent process using a top down, bottom up approach. What that means basically is starting with a higher time frame and then going down in multiple fractals or time frames, and then using micro time frames for actual interaction with the market, which is where bookmap and order flow tools come in. Microstructure meaning triggering structures. This is a consistent process. And what I have found, at least from my own experience over 40 years of trading, not only retail, but as a professional trader, uh, managing dollars for firms and also having my own firm, which many of you may or may not be aware of, that it's a consistency of an application of a process, no matter what it is, that gives you an opportunity to vet the process or measure it. It is the measurement of the process that can help develop the confidence to actually execute. There is a random outcome when you engage with the market that is absolute, because we have no control over other participant behaviors. That creates the random outcome of any interaction with the market. However, over a large sample size of these interactions, if you do the work, you may find that some of these behaviors or triggering structures or whatever you determine it is that you can define actually have a statistical edge. And it's no different, and I always kind of come back to this because we need to relate to this. It's no different than how a casino works. There's the house who has the edge, and then there's the gamblers who sit at the table. At times, the gamblers walk away with the dollars. But most of the time, over that large sample size of gambler interactions or risk, the house has the edge, and the house ends up at the end of the year with a positive net return. And that is essentially what we do as traders. We are establishing an edge, and then we are working with the gamblers. And it isn't that the gamblers don't walk away with dollars. The reason they come to the table is because they do. However, over the larger sample size, the house is the one who makes the profits. And if any of you have ever been to a casino, there's a reason why they give you the cocktails and that they have all the glitz and the glamour and the coupons and to the buffet. And picking you up at the airport subject and the hotel comps, all of this, that's all their overhead. And even the gamblers who walk out with a suitcase of cash in spite of all that, and let's call them losses in our book is how we interpret them, but in reality they're really costs of production or overhead. Can you reframe that? That is the business of trading. And in the Trader Lab, it's about attempting to share a different viewpoint of what trading is. Trading is not a video game, and it isn't just impulsing. It is planning, waiting, being patient, and having a statistical edge. And when it shows up, having the confidence and developing the confidence and discipline to wait for that edge to show up and to execute when that edge shows up. So the purpose of the Trader Lab is to help you define these things. And in the Trader Lab, we actually narrate this as close as possible in real time. My time slot, and kind of think of this like a fixed time slot, the market's been open for 2 hours. So that's why I start at the top, go back over what has developed, how it might be interpreted, which setups that are part of Trader Lab methodology that might apply, for good or bad outcomes because of the randomness, and then I go into real time. That is the purpose of the stream. That's how this is done, and it's done the same way every day. And if you find value in it, I invite you then to potentially join the Trader Lab and become a participant and develop a career in trading versus, let's just say, being a visitor. Up to you, of course, and everybody's mileage will vary, and even the approach and the time frame and how you want to operate is really a personal choice. But if you don't vet it, no matter what it is, and if you can't replicate it and do it on your own, then you have not accomplished, in my opinion, what the objective should be, and that is to become independent and establish the business of trading and create a potential career. Now, everybody's mileage will vary. Everybody's different. We all have psychological issues that we have to deal with because that's the reality. But having a vetted process can help you manage that emotional state, the fear, the hesitancy, because the thing about trading is there is no sure thing in trading. There's only a random outcome. And we're not wired for uncertainty. We were always seeking certainty. I believe the certainty is developed in the trade metrics. And the certainty isn't one trade, it's the sample size of a large distribution of trades. So your certainty doesn't come from one trade. The certainty, assuming you can execute the edge you vet, comes from the work you do to establish the metrics. I hope you find that useful, and that is the purpose of the Trader Lab. And if you find that approach, and if that's logical to you, if you find that something that might make sense, and if you're waking up in the same place with the same results by doing the same process in a derivative fashion, in other words, different indicators, different time frames, different rooms, different chats, different indicators, then you're really in Trader Groundhog Day. I've been there, I've done that, and you probably have been there or are there. And if that's not satisfying for you and you're not getting the results or progress that you want, then I invite you to visit the Trader Lab and see if there's some pieces in there that might help you further your potential career along. It's not about the Trader Lab. It's really about education and seeing what you can relate to and what might make sense. And again, thanks for visiting the Trader Lab. And later on, I'm going to offer you all an invitation to visit and participate in a serious group of traders with varying years of experience, from newer traders on up to I think our senior trader admits to 54 years of experience, and that might say something about the Trader Lab. Not to mention my own, which is going on 43 years. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode. It's strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor can potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results, and please remember, this is not a trade calling room. We start top down and then we go bottom up. We go back to the yesterday's close and behavior. Then we will take a little bit of a look at ETH today because there were a few trades after the PPI report, which is a significant event. And then we'll go into RTH real time from the open moving forward. So I hope you'll get something out of that today. We have a number of Trader Lab setups, which of course, if you find them interesting, that you need to vet each one individually for yourself. They are specifically aligned with the developing context being the condition of the market, and it changes and evolves during the day. So you need to be able to learn that. And all of this takes time. And in the Trader Lab, we have a process for building these mechanisms out and building a trade plan. A trade plan is really a map. And the thing about trading is it's not about being impulsive. It is about waiting for your bus or your trade to show up. You need to be able to know before the location of the trade where that is. And that's what is about vetting a trade plan. So that is context, understanding how the behavior of the market works, which is the context, and then specific locations. And in this case, auction market behavior, and using a volume profile as a tool to see this participant behavior and then potentially get aligned. And like everything, past performance is not indicative of future results, because when you put a trade on, the best you have is maybe. So let's go and get started. And thanks again for visiting the Trader Lab. Let me try to get this thing going. And I want to remind everyone I am streaming from Costa Rica. And the best thing in Costa Rica is occasionally the power does just drop out. Where I am, I'm in a small beach town on the Pacific coast, and also the internet occasion just takes a brief vacation. So if I drop out, hopefully I'll come back in a minute or two if things reset. Also, if you're a part of the Trader Lab, this stream will be available for you to review over the weekend, and I think it's a good one that you should tear apart, do screenshots, and look at the microstructures. And that's how you learn. It's repetition, planning, screenshots, rinse, repeat, rinse, repeat. Now, let's try to do this without causing trouble. Of course, there's trouble. Okay, this is the higher time frame, and this is as of the close yesterday. Now, what this is a consolidation, and you guys know what a consolidation is. What's too low, what's too high, and rotational trade, and this is your rotation, all right? So yesterday, and let me point out a price point. This is very important. This is the volume profile, and what we're doing is we're overlaying days that overlap. And consolidations are trading inside of each other. So you guys all know that. And if you don't, this is kind of charting 101. And all it is the market's looking for what's too low, what's too high, what's too low, what's too high, what's too low. That's consolidation, right? What's too high. Now, this is when Powell announced that maybe we won't increase it so fast, and the market took off, took out these highs because there's buy stops above here, and we had to squeeze. Okay, the following day we went into balance, and you could see the wicks on both sides of this candle. That's basically two-sided trade, so it's like a fight. No, we think we're going up. No, I don't think. I think this is too high. No. And what balance is in one day is consolidation. The same, and this is a fractal now, the same as this whole thing. So when I discussed the auction, I tried to go in multiple time frames. And think of it like those nesting dolls or Russian dolls, as we call them. They're inside of each other. So the day can be inside of a bigger time frame. And then inside of the day are the similar time frames in more microstructure. So that's kind of how you drill down, top down, and then working inside out. So this was a, I don't know, kind of day, maybe day, but no continuation. And then we opened, buyers tried to take it back, and they failed to get above this high volume. Now, I want you to think about high volume like retail price. In other words, in this whole consolidation, this whole thing, this price down here, the orange line, is for the whole consolidation, retail. And it comes in around 60, roughly 59, 60, and in trading it's horseshoes and hand grenades. There's no precision. If you're looking for precision, that's not how the market works. There's a lot of slop, and a lot of that slop is created because of stops and other elements that are in the market that create momentum. So levels are not walls, they're areas. Keep that in mind. And by the way, grab a pen and piece of paper, take a couple of notes, and try to get the most out of this while you can. And also, if you're following the stream, this is available again if you come to the Trader Lab in the Bookmap Discord chat, and you're all welcome. You won't be solicited. You don't have to be a Bookmap subscriber, and there's a lot of additional education. Now, what this green line represents is high volume. It is the same as this orange line, except these are in more fractal or micro structures. And when you see the volume like this rotation or this little, call it a little belly sticking out, it's really too high, too low, too high, too low. Retail. Now, the thing about a retail price, I kind of think of these kind of like stores, shoppers, right? Buyers and sellers, participants. Aren't we ES shoppers? So if we're a shopper in this time frame, this was where it was too low, and that's where the red line is. That's called a low volume node. And don't get hung up on the minutia here. It's really just logical. Oh, it's on sale. If you think this is a fair price, you're going to go, oh, it's a bargain. I'm going to buy this. Retail. It gets up here. This is kind of expensive. When I'm buying my tuna fish, I don't want to pay over $1. Here's $1 tuna can, and now they put it up to about $1.50. I'm going elsewhere to shop, and they leave this behind. So they leave. Okay. Now we come down and we auction in here. It's too high. We're out of here. How about here? No, we're out of here. We're out of here. And now the volume, you see, in this whole collective time frame is right here. Now you're wondering why? I want to give you the top-down look. Now let's go into today, and hopefully I can switch over here to Bookmap without creating a nightmare. Now remember this number. Write this down. 3960, and I always say ish, because it could be 59, it could be 63. None of that is relative. It's an area, right? And I always say horseshoes and hand grenades. Okay, now I'm going to go to this is the report, the PPI report, and you could see that was like, oh my goodness, I don't trade these things. Why? Because in my trade plan, I have risk parameters that have to fit my trade. And I don't need to trade the report unless I had a much larger account size. And I prefer to do is trade with less risk, in my view, of course, per my plan, but more contracts. So think of it that way. You want to trade one, and as Dirty Harry said, do you feel lucky? I mean, how do you trade something like this when there's nothing there? If you had a stop here, they'd send you a note, a telegram. Yeah, you got filled down here. We'll get back to you next week. By the way, back in the days when we traded on the floor, with floor traders and with paper, literally, where you would write your order on a pad, timestamp it, pick up the phone, call your guy who would flash it into the pit. That's how I started trading. So kind of archaic, I guess, but that's what it was. And if you had what they had, they would call fast market conditions. They didn't even have to give you the fill back and say, yeah, we'll catch you later. Yeah, not held. Fast market was not held. In other words, oh, your stop was where? Yeah, not held to anything. That worked out pretty good for the guys at the exchange. So let's take a look. We have the report, and here is that 60, 59.50 to 60. Remember, I just showed you in the higher time frame, retail. The market breaks off the report, and let's look. Where do we come? 60. So this is the first short. Now, so you guys understand, I don't call trades, and the reason is it's a waste of your time. Anybody that's giving it to you is not helping you. They're actually creating dependency, because all of a sudden, if that whoever that is, chat room or whatever, is calling trades, and everyone thinks they're learning. Well, the way you know you're learning is if that chat room disappeared tomorrow, and could you replicate it? Would you have a process? If the answer is no, then I don't think you're not accomplishing your goal, unless your goal is just to be here as long as that chat room is available. And that's fine too, because it's not for me to decide. It's for you. But if you can't walk away from any education with something you can use independently, then I don't know. Unless you have a different objective, then I don't think you're creating a career. You've created a dependency. But again, others give their dollars to trading advisors, or to, any kind of advisors, right? Name your big brokerage house. They have advisors. That's all the same. If you like having an advisor and just pulling the trigger because it's kind of fun, you know what I'm saying? So and I'm not knocking that. I'm just saying is be sure you understand that is what, if that's your intent, then that is exactly what you should do. If you want to be able to do this on your own after the Trader Lab is gone, which it will be gone at some point, obviously, then I think this kind of education might be more helpful to you. And again, it's subject to your objectives. This is that retail price in the higher time frame. So we have the report. Everybody jumps out the window. And what do? We retrace back to here. 60, right on the button. This is a short, and the objective would be back here to the overnight volume point of control. And why retail? So this is right here, overnight volume point of control, retail. So this is a short, and I'm just showing it to you because it's structural. I'm showing you the auction, you see, because if this is retail, oh, I'm not going to pay that. And then this is retail in the ETH. So higher time frame retail. And again, you don't know. But this is a triggering structure. And we'll go into more of those when I get into RTH because there's just more of them. And then this would be the target and then hold or whatever. So let's look at this thing. Look where it goes. Is that a coincidence? Well, personally, I don't think so, but that's just me, right? So short to here, and then the possibility is bounce because this is retail. So retail in a higher time frame, retail in here, and these are posted in the Trader Lab as close to real time as they can happen. This being shifts up at the time that is potentially suggesting potentially this might be too low. So anyway, let's now move past this one and get into RTH, which is here. Now, we are below here on the open. We open here. At the moment, this is too high, and this was too low. So what might be the opportunity? So let's go take a look. Let me get to the open here. Let me see if I can do this better. Moving this around is kind of difficult. Here we go. So now I posted this as it happened in the Trader Lab. And remember, I don't call trades, and typing is a little difficult. But since I'm not, my time slot is from 10:30, and the open is pretty important. Now in the Trader Lab, when I talk about the open, I talk about it as an isolated trade plan. And part of that has to do with the speed. So that's why I don't encourage traders to try to trade the open, because it takes, you have to be at a level of expertise, or call it, it's not expertise, but experience really, of very unconscious competence. And when you're learning the trade, no matter what your development process is, the more you get into more difficult or speedy or fast areas of trade, it requires just more recognition and unconscious competence to have a timely response, and also to fit your risk parameters. So for most traders who are developing, it's not a good place to play. It's a good place to observe and isolate and develop a separate plan for it. But we do talk about the open, and it's very important and offers a lot of opportunity and, of course, risk. So the first trade on the open is to see the behavior against this location. Remember, it was too high, right over here in the ETH after the report. So let's watch. Market opens. Let me make sure I'm in the right place. It's a little hard here for me to make sure I'm in the right. Okay, RTH open right here. volume point of control starts. Now, so you guys know what this is. I always go into this. Um, this is where the high volume is. And all of this resets at the RTH open. So this is the volume developing. Okay. So let's watch the behavior. Now remember, retail price in the higher time frame, retail price in the ETH. So retail, retail, fractal. Watch. This is a short. Let me show you. And here's why. We tested this in the ETH and we opened below it. This is resistance. This is support. And we don't know what it's going to do, right? I mean, if I knew what it was going to do, I would skip the trades that don't work. I mean, wouldn't you? So here's the sign right here. Watch. So the market opens. Here's your volume. Here's your volume. We roll higher. We are under this area. This is like an over-under. And I narrated this in the Trader Lab. Now, I don't recommend any of this because I just want to show you the auction behavior. This is not about you guys taking these trades at all. It's about you, because if you can read it, at some point you'll be able to read this if you practice it. But initially, it's so fast. I mean, we're in 30 seconds here, and here's a setup, that takes a very quick reaction time. So it's not anything that I would recommend, but what it is how do you read this? Let me show you how do you read it. And this is, again, really more advanced, but it's kind of what we do in the Trader Lab. Okay, so let's take a look. Chop, 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 right here. Watch. So the market opens, it moves higher. We're under that 60. Here's the order book. Chop, chop. 47 stops go off. 15 stops go off. So right in here, this chop, this here is an auction. This is like going to the convenience store, okay? I don't know, are you guys hearing screaming in the background? Just curious. Okay, no screaming. Okay. Well, it's not me screaming. Sometimes I put a trade on, you'll hear yelping. No, it's not the monkeys in the trees. What it is I'm right next to, there's a pool, and there's a little one in the pool that's having a great time. And if you remember when you were a little one, you had a high-pitched voice. So I just, trying to make sure you're not hearing that. So this right here is a potential triggering structure. So let's see what it does. See the order flow? Watch the book. Now, so that's a short. And you guys are going to say, oh, this is in hindsight. I hear that so much. And I have to tell you, it's not in hindsight in the Trader Lab. And, this is just one way. I'm trying to move this up here now. Let's get over here. Now, remember, this is the first obstacle, and we don't know what it's going to do. If I knew, I'd like that a lot. So this is a trade to here. Now, and remember, it's the same trade we had in the ETH. Isn't that interesting? Just from a little lower level. Now, here, so this is your scale if you're going for multiples, or it has a nice range, you're out of the trade. Up to you. What's your trade plan? Now, we come back. So I look at that, and let me give you the explanation. Here's how I put this together, and I'm taking the time because the reason I do the stream this way, and it might be painful, is if you don't understand why, what's the point? Here's why this is important. In the ETH, this was the retail price. Remember, in the high time frame, this is the retail price. Multiple dimensions, multiple time frames. So retail, too high. ETH, retail, too low. So if we check a price, think of it like going to the store. Now, I'm not saying we wouldn't shop if it's too low, but what it might mean is this retail price is too low relative to the developing value. So if the participants refute a price, that was accepted previously, it might be saying that price is too low. Let's auction in a different location. That's what I draw from that. So too high in a higher time frame, too low in the most recent auction ETH. And that's called the overnight volume point of control. This in today's RTH is a developing volume point of control. So it's kind of like retail, 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 retail higher time frame, retail ETH time frame, retail developing time frame. Does that make sense? Oh, you are hearing some screams? Okay, well, somebody's having a good time. All right, so let's go take a look here. So now, if this is too low, and so then what we're looking for, if this is too low, where is too high? We know this was too high at the time from the ETH. We know this is too low. Let's put pieces together. Take notes. Think about it. So if that's too low, this is too high, this is now retail. The potential exists if this is now a fair price to go back and check this. So potential, since we rejected this, and here's the other thing to look at. Bookmap helps you see this. See the green bubble, 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 bubble. Buy, 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 buy. That's aggressive, isn't it? Isn't this a change in behavior? So now we come to retail. This is my resistance. Potential long. This is a setup in the Trader Lab. And you're going to scale ahead of 60. The book comes down. This is potentially a problem. Let's watch. 60. So, and do you see the symmetry in all this? This is the point I want to make about the auction. You can see these levels. Then it's a matter of how do you interact with the levels. Remember the key component, what happened down here. Too low. Retail. Now we're going to look for too high. And what the market had the tendency to do is come back and check these levels. We're right back here again. And what's sitting up here? 60. Look at what's happening here. The book is starting to come down. Where do we go? Here. Is this logical? Is that a yes or a no? We come back and check retail. Another Trader Lab location. This is a triggering structure. I'll go into them at another time, but you guys have been following the stream. Boom, back to 60. So long 60, long 60. Here's how you can play this. Long, scale 60, pullback. It doesn't take this out. Your stop is under here. Triggering structure, long, stop under here. Scale 60. You could be building a position or just taking, whatever. And since we are not failing back under here at the time, potential continuation. And again, who knows, right? So now, this, yesterday's close, and this is called the negative volume point of control. And this is based, I think I have the right level. Somebody confirm that, let me just see. Trader Lab confirmed that this is naked volume point of control, 66-ish. Can you guys help me with that? Yes, okay. This is the retail price from the previous day, and I think it was yesterday. I don't want to go and look at the higher time frame. Is that correct? 12/8. Okay, thank you. Yes, yesterday. Okay. So this was retail yesterday. So look at the fractal. Higher time frame, 60. Overnight ETH, 45. 45 is the low. 60 is the obstacle, right? Breakthrough, 60 now becomes potential support or not. This is yesterday's retail price, next target, and settlement. Can you see a method here? All right, Jim, 65 half, shoot me. What do I have here? All right, 65.75. Jim, we're going to have to kind of go out behind the garage and argue about this. So this is the next target, retail. So the way you would work this is, remember, long, 60, scale, pullback, doesn't break it, long, 60, scale, breakthrough, next retail price, here, scale, or done. See, this is what we do in the Trader Lab. It's chunks. I call it meat on the bone. What is my range from here to here? That's a 10-point trade. Okay. To 60, from where? 56 to 60. Scale, risk neutral. You see, this is what we do in the Trader Lab. Lulu, you're saying you don't see 60. Lulu, 60 is in the higher time frame. So let's watch now. VWAP. Let me just make sure. Okay, 40. I'm just making sure where I am because we had a lot of trades today. Okay. Pull back to the VWAP. I thought we had one to the mid, but I can't remember. Maybe that's later. Pull back to VWAP. Potential long or not. I say or not because the volume point of control is below us. The volume point of control shifts up. This is saying too low, potentially. I mark that. I call it a variable high volume node. Here's something else I want to show you that's kind of important, and this is from the profile world, you know. This is, remember I showed you that, you know, those round distributions at the beginning of the stream, what they are? That's an auction or a consolidation. Auction or consolidation. When we tested down here for the short, the first trade in the morning, we didn't stay down here. So we ran quickly. See how much time and how little volume took off here? That is saying too low, potentially. And again, we don't know. So most of the volume is taking place up in here. So this it becomes an outside edge. So if we go get rotational, potentially we can rotate around this thing. Now we don't know. I don't think anybody knows. I'm just saying as we don't know. Now here's another interesting little piece. This was retail yesterday. Pullback. Now this is our VPOC again. Now let's go back here. Remember pullback, longs? Now you didn't take this. What did we do? Pullback, long, another long. This is all Trader Lab, guys. Now, this is interesting. I want to show you something right here. This was too low, remember? And I marked it. I called it a variable high volume. I didn't know what else to call it. I had to make up something, you know. So when I started doing this, and I started doing this a long time ago, I'm trying to remember. Peter Stottlemyre actually taught me market profile. He did in 1985, maybe? I don't know. But 1985. So I started looking at this stuff a while ago. And I want to tell you, when I first started, it didn't work for me. And it was because of me, not because of the market profile. It's because I developed trading systems because I was a swing trader, you know, and when I was managing dollars as an advisor, it was swing trading, trend following. You know, nobody day traded, you know. If you're on the floor, that's, you know, what you did. But I was kind of under a rock, sitting at a early version of CQG. In fact, before there was CQG, there was something called the ADP comp trend. And so I had the first version of CQG that came out. It was called a TQ 2020. Anyway, neither here nor there. But let's look at this. Variable high volume node. This right here is a potential long, right there. And the obstacle, but the idea of this one is, if this is too low, right here, then we have the potential to come back and check this. So here's what happens. You put it on, And this one doesn't work. Or does it? Comes back again and checks it. You put it back on. This is your potential target up here. Now you have UOM. So with this one, if you took it, you're taking it in front of a report. Now, when I see a setup and I have a target, this is again subject to your trade plan. I personally don't have a problem with it, but I also know that if I'm sitting here and nothing is happening, I'm willing to jettison the trade, or I don't take the trade. Now, what I do is not so material. I'm showing you structure here. You know, your trade plan has to say, well, you know what, it's 5 minutes in front of a report, maybe not so much, and you just wait. Then we get the UOM. This is also another big report. Okay, these are major reports. UOM pre, PPI. These are the big reports. So now, what do? We take everybody out and write this down. Here's a clue. VWAP, mid, and VPOC are in alignment. What this is suggesting is something called balance. Now, this is a different configuration. Let's watch. Now, balance it's a different context. Let me explain. Now, when you're moving directionally, you know, fine. All now, look what we've done. We are now trading two sides. Now, this is a report, and let me show you something. Let me get this lined up here. Where's the low of the report? Does anybody know exactly? I think it's right here, isn't it? Where are we above? Overnight volume point of control. This was our retail price that was too low. We slam all the longs out. Thanks for playing. And what do? We come back. So this is saying now the mode of the market, or potentially the context, is now two-sided. So where did we come out? Out to this outside edge. Now, at the time it happens, we could do anything. You know, we could keep going. Anything can happen. What do? We come back. That suggests this was a reaction off the report and a flush of the financial commode. Outside edge, remember, too high, too low. Oh, it's on sale. And we don't know, just remember. And now we come back to retail. So this suggests two-sided trade potentially, and now we're in a different context. But because we are still above this, it still suggests preferences the long side. Now, I understand you may find this, you know, really? Well, it's not that you know. And what we do in the Trader Lab, we have a thing that I always recommend is that you narrate. So you need to be conscious that we tested this on the open, and you need to remember that we tested it and that we didn't take it out. Well, we checked it right back. So now we get the report and everybody gets kind of flushed out, but all we did was come outside. And remember the condition of the market. These are overlapping. Mid, VPOC, VWAP. That suggests two-sided trader balance. So it becomes what's called mean reversion. Write that down. Now, when this happens, you don't know it. It's when this happens that you know or suspect, because we don't know anything. So let's watch. This is the volume point of control. It shifts higher, suggesting this might be too low. We have a setup in the Trader Lab called the VWAP to VPOC. And let's put the pieces back together. Too low, balance, which means rotation, outside in. This shifts up, suggesting outside in. So let's look what it does. Outside in. This is a Trader Lab setup. And again, you know, your mileage may vary. And if this doesn't fit your trade plan, you have nothing to do. Except this is what we do in the Trader Lab. Is this useful? I don't know. You know, so outside, this is the mid. Pullback, triggering structure, target. There's two setups combined here, actually. VWAP to VPOC. And because the mid is close, stop pick. Thanks for playing. Everybody, retail trader behavior. Put your stop at the mid. We'll send you the parting gift. This is a triggering structure. Chop, break high, pull back to micro volume, which is in there. I show these all the time and they're documented in the Trader Lab, and you're all welcome to visit the Trader Lab. And this is a long to here. Then hold. And whatever happens, happens. Now, now let's go back to why. Because of this, and because of this, because of this. Remember, retail trader behavior. Too low. Fair price. Come outside. Back here. Now, if it's too expensive, it can be rejected. That's why you scale. Now, let's watch. Now, we are anticipating two-sided trade, right? Why? Balance, remember? So it's balance, but we're leaning to the north side. And I posted this in the Trader Lab chat. It's because I say, well, what side? What side? Well, it's mean reversion. But what we're seeing is we're trading above this. Remember, retail in the higher time frame. And by the way, it's not a wall, it's an area. We're trading above this, which was our retail price from back here, right? Longs, remember? And it's two-sided trade. Now, we don't know if it's going to come. You don't know what it's going to do, right? If I knew that, we come back outside, remember? Where do we come? Here, so it's a long. Boom. What do? We pull back. Does this look familiar? Have you seen this before? Price check. Where's the check? 60. Watch. Anything can happen. Price check. Longs. This is what we're doing all day in the Trader Lab. And by the way, some days are better than others. Okay. Watch. So this is a long. Does this work for you guys, or is this too slow or not enough action? Because I know there's traders who are action oriented. They like to push the button. I kind of look at it like I want to just take my little risk and go for this, you see. Now, any questions before I go on to the next trade, which is a mean reversion trade? Any questions? How are we doing in the Trader Lab? By the way, I invite all of you to come to Trader Lab if you haven't been there. I do as much as I can. Typing is rough, and I cannot, I don't narrate in the sense of calling trades, but I do question the members of the Trader Lab. What is the context? Where might the next trade be? How would you manage the trade? This is what goes, that's the dialogue I do, because I don't give trades. What I do is I've given all the setups already in the Trader Lab. They're posted there. I've given many examples of these in print, and these streams are available to Trader Lab participants for review, you see. So it's about you guys doing the homework, vetting the trades, screenshots, replays, because it's you being able to do it. I'm already, well, what does it do if I say do it here, do it there? It doesn't. What it works is, where's your next trade? The thing in trading for me is when the market's sitting here, I have no idea if it's going to take out this swing or come, right? I don't know that. None of us do. But I do know if it comes back here, what my next trade will be. And then I'm looking for a triggering structure, or I'm looking to the left to see what's over here. What might happen? These are vetted setups for me. So I don't know. What I know is I see the rotation. I see it fail to take this out right there. I'm going, okay, what's going to potentially happen? All these longs in here are potentially going to get taken out. Okay, where's their stops? VWAP, mid, V in there. And I don't know where it's going to come. It could just keep going. Then I'm waiting. I'm anticipating, but I'm remembering what is happening in the context. we are leaving these previous areas behind. If it comes down, where might we check? Out in here. Where did we go? Out in here. All we did was get below this swing and take out these guys. Is it reasonable to anticipate that can happen? How about yes? And where are we? 60. Where are the stops? Under the mid. This is all what we do in the Trader Lab. And then it's you put your helmet on, and if you get a trigger, you take the trade, you take your stop, or you take the trade, you get your scale, and you have your helmet on. And then, you see what I'm saying? Now we have another trade. And by the way, the target on this, which I've neglected to say, was this. Because at 9:30, remember, and you guys have followed the stream, we have something called the IB stat. And the IB stat is that the first hour high or low, and remember, nobody knows, except right now we think the context might be up, but we're leaning towards the north side, that the first hour high will get taken out, and it's over a 90% probability. Write that down. Past performance, not indicative of future results. You bet everything, no matter who you hear it from, me or anybody, because you got to develop the confidence. But it's a pretty well-known statistic. Come to the Trader Lab, there's a lot more statistics that we lean on. And all you know, remember, the house, the casino is basically playing statistics, and so do we in the Trader Lab. It's all maybe, it's all random, and who knows. So, but you got to have something to aim for, right? So if the context is going higher, if we're coming down and checking 60, you see how these pieces fit? This is why I say it's fractal. You see why this was too low over here? You see why we might come down and check where's too low? Remember, the outside edge of this distribution is down here. So out in here is where the outside edge might be. Stops are under here. Thanks for playing. There they are. Now you see down to the mid, boom, long, back to here, target here, helmet, hold, yesterday's high, a reasonable target, right? Stops above yesterday's high, not unreasonable, boom, done with the trade, and you could be done at any place you want. If you're running a 2-lot, you might be done here. If you're running a 3, you might be done here, or not. And now, I'm just showing you some trades, right? Now, let's look. Now we have another trade. It's called, are you guys with me before I go to the next trade? Captain, it's choppy, but the thing about the chop is inside the chop is the auction. So I always was very annoyed about chop because I would get, quote, chopped up. I still can have the privilege of chopped up, but I try to do it at specific locations that I've vetted. Early on in my trading, I really didn't, didn't appreciate what this is. I now appreciate it and still get annoyed. But the thing about it is there's a message in this. This is an auction right here. Think of this as I always think of it as the convenience store, kind of like going down the street. And I don't know. Remember, I don't know anything. I only know maybe. Where's the high? I don't know. But I do know yesterday's high, right? So that's a reference point. And I know this has over 90% probability coming up. So that's what I know. The rest is all maybe. So write that down. The best you have in trading is maybe. So that's why the job number one is risk management, getting risk neutral. We talk about that in the Trader Lab, and that requires a minimum of a 2-lot configuration. And if you're not familiar with that approach, I recommend you come to Trader Lab so you can kind of get a sense of why. Because the thing about it is, if you're an all-in, all-out trader, I don't know about you, but I had to have one of those air sickness bags, because right here you're going, oh, this is great. You see this, you might bail out. Or you might put your, trail your stop somewhere, like here, and get taken out right there, and then the market continues. If you have a 2-lot configuration, basically you're buying the stop on your runner so that you don't have to move it. And psychologically, you're not going to be twitching because what happens is your brain is in a fight and flight mode and a FOMO mode. and you see open trade profit, here, just say you're up $200. Now you lose half of it. Theoretically, you're going to push the button and you won't even be conscious of it. If you have the risk locked in and covered on the next contract, the worst that can happen is you scratch. What that does is give you better control over your emotional state. And it's not a choice by how you feel. Early on, I used to think it was willpower. It's not willpower because the chemicals are released in your brain. Your brain doesn't differentiate between the saber-toothed tiger and the pain of a loss or the pain of giving back, open trade profit and stuff like that. That's all pain. And we're wired to avoid those things. So you can't beat the wiring, you have to manage the wiring. And one of the ways to manage it is risk management and getting risk neutral. And if that's something you're not familiar with, come to Trader Lab, you'll get a better understanding. And also how it changes the outcome for traders. Now, this is our iceberg detector and our stop detector. I use these to help me, and they're very important. By the way, look at that, 1,000 stops going off. Thanks for playing. We're going to send you the parting gift. 1,000 icebergs going up. Now, I look at icebergs a bit differently because I don't know what they're doing. I mean, the fact that 1,000 icebergs are getting executed in here, is that any reason why you should be short? How about this guy might be long and he's covering? Can you tell the difference? I haven't figured it out. So when you guys know, you let me know. But but what I do know is this is what I know. Yesterday's high. That I know. And I know what's at yesterday's high. Buy stops. So I'm going to exit either in front of yesterday's high or when it pops through, and then be ready to bail out because I know there's fuel up there. So let's look at yesterday's high as an example. Now I'm going to show you the next trade. And I don't see a lot of questions, okay? I'm getting a question on how to get into Trader Lab in the Bookmap Discord chat. Go to bookmap.com. You'll see a link that says join the Discord chat. Go to join. You don't have to be a Bookmap subscriber. You won't be solicited. And then find your way to Trader Lab. In the Trader Lab, there's a pin on the right top side of the Trader Lab chat. There's 60 PDFs of these behaviors you can download. You can study them. Take a look. They're very detailed. There's also a primer webinar I did for Bookmap about a year ago, before I started streaming, before they asked me to stream. And it goes over this process plus auction market theory, what the volume profile represents, how you might use it, triggering structures, context, the psychology of retail trader behavior. Think like a retail trader, don't act like one. How to narrate the market, stay in alignment with it so you can try to detect changes and triggering structures. It's got all of it in there. Plus how to generate metrics, which is really the key to creating a career in trading. So you go to bookmap.com, go and visit. It's a way to approach the market. Everybody's different, and for me, it's not like right or wrong. It's not like do this or else. No, it's look at it. But I found that I had to strip everything out in order to create a consistent process. I used to be, as a system designer, it was all backwards looking indicators to try to look at what's going to happen in the future. And what happens with that is it's a curve fit process, and ultimately you're always trying to drive Formula One by looking in the rearview mirror. I don't do that because it doesn't work for me over a large sample size. In other words, it can work in a short term. And a lot of us see a big move and we grab an indicator, slam it on there, and think next time it happens, it's going to be the same thing. You may have a process you're using that's a guaranteed loser, and you might not even know it. You just see the randomness of it, and the outsized rotations in a random process is still potentially a losing process. If you can't vet the metrics involved in any interaction with the market, you're the gambler. The house knows the metrics. So I recommend that if you're going to be in an environment of risk, that you sit on the house side of the table, not the gambler's side. And that's why the gamblers come to the table, because some of them walk out with that suitcase, with cash. but the house is the one that keeps the cash over the large sample size. So you just have to think a bit differently, I think, if that makes sense to you. So now we're going to look at the IBF, is called. Now this is where the market, now let's put the pieces. We're above here, right? We got the IB stat, over 90% probability, based on some statistics that you need to vet. We took out the stops at yesterday's high, right? All good. And now we fall back inside. Now this sets up a potential short. Now we have a setup in the Trader Lab called the IB failure. And I made the name up because I didn't know what to call it. And you may not, I don't know what other people might call it. I don't know anything. What I know is just what I do, and I just try to put labels on some of these things. So the IB failure is a mean reversion trade. And what it is the potential to return to the mean. So you know what the mean is, and we call it mean, and we joke about it, this is the retail price, remember? In the higher time frame, this is the retail price, 60, remember? Going back. So if we come back inside, what is the condition of the market? It's all long, right? Where do retail traders put their stops? Under here. So if I see the potential for a short, and remember, I got some of my primary targets here, which doesn't mean it won't go higher. I have no clue what it's going to do. But I have a setup called the IBF, and the IBF is a short to here. Actually, it's a short to VWAP, mid, VPOC, so mean reversion. Okay, and developing value area low. That's the sequence for that trade. So let's look at it. Now this up here is a triggering structure. If it's not part of your trade plan, this is a short trigger. If you're aggressive, you'd be short here with a stop over the high. If you're not aggressive, that's okay. You would be waiting. Watch. Right here is high volume. So you have high volume here. I'm going to show you the trigger. I think I should. I want to show you the trigger. Now this is microstructure. Now if we're looking at this in fractals, in other words, high time frame retail, yesterday's retail, which was a target, okay, so too low, yesterday, too low. What is our potential? And this is retail at the moment of this structure. If we come back inside after hitting our target, remember what has to happen, and we don't get buying above there after we take the stops, then the potential is to counter rotate. And the reason for that is there's all these sell stops trailing this move up, right? Retail trader behavior. So we're going to use retail trader behavior as an asset. Remember, think like a retail trader, don't act like one. So here's the structure. Let me try to isolate this. And I had a question about when do we roll over. It's effective ETH Sunday night. So I'm going to be on the March 2023 our open Sunday ETH open, and then Monday will be on March. I've already got it filling in here. See this right here. So remember, we're looking for yesterday's high as a target, and we don't know, what, if, or any, except we know stops. So that's why you don't step in front of it. You want it to get taken out. There it is. Now, right here, we're looking now for a short. Let's look. Right here. Got to open it up for you. I'm going to show it to you. So right here, we're over yesterday's high, right? Okay. Here's our stops. Right here, this is volume. I'm going to try to open this up even more because I want you to see. Now, this is called microstructure, right? And these are triggers. And you're going to see them all over the place. The point I want to make is they have to be at a location that, otherwise they're just rotational. They're micro consolidations. But tops or extremes or triggers are really consolidations. And remember how I talk about the volume point of control, the retail price in all time frames or fractals? This is the same thing. except it's going to be in here. So right here, this volume is starting to go off here. And you'll see this little node going off here. That is the same as that and that higher time frame microcomposite volume control. It's the same behavior, but it's in a fractal. Remember Russian dolls, right? So it's right here. And when the market came up here, I post in the Trader Lab, what's the next trade? The next trade is the IB failure, which is coming back here, back to the volume point of control where it was at the time, and then maybe lower. So right here, you see the volume. You see the volume. This is a triggering structure. Pull back to the volume. Volume is there. Now, this is minutia. I'm not saying you should be doing this or even thinking about it. I'm just showing it to you. Right here, chop, chop, chop. Volume, triggering structure. So here is a short, and we had Rod in the Trader Lab get short here. Rod, nice work, because it's a setup. This is volume. So too high, break away from it, pull back here, chop, chop, chop. Now, a couple things could happen. It could have also done this. So you don't know. Chop, chop, chop. Break low, pull back to the volume. That's why it says HVN. Break. So this is the IB failure. Now, we had another trader in the Trader Lab. On this pullback, I think it was around here, he got short around 69, right? And he got scaled, and then it came back in his face. Now, let me explain something right here. The volume point of control shifts up. That is suggesting what's below us is too low. And I call that warning Will Robinson. This here, see this? This is saying too low. Now you notice previously, if we had the shift, it would be a potential one, right? But we're in the IB failure, which still has the potential to come down to the mid, down here, and down here. But this puts the whole thing in question. There's your retail price in the higher time frame. So let's just watch the behavior. See? So, too low, label it. This comes up, to short it is in jeopardy. Watch. Sets up a long, pull back here, long. And pull back here. What is it? Anybody? What is it? Pull back here. Anybody? Price check. Price check. Well, the big aisle, this is the price check in the big aisle, but, and too low. VPOC migration. And we have a trader that's been focused on the IB failure, which is the short off of this yellow, which is the IB. And he's doing a great job. Rob Davis, and he decided, and this is what I recommend in the Trader Lab, you pick one setup, and you become expert at it. The true test of expertise is being able to teach it to someone else. And that means, and there's more to this. In other words, you have to know the context. Certain setups, of course, don't apply in different contexts. And what I recommend is, and this is just how I did it for me, which is not saying it's right for you, is I have a different trade plan for different behaviors. And it changes interday. It gets directional, and then it gets rotational. If it's directional, I'm trading it one way. If it gets two-sided or rotational, I'm trading it a different way. If it becomes mean reversion, which is the outside in trade, it's a different setup because it's aligned with a certain context. So if I have upward bias because of the condition and all the things we previously stated. I'm going to be looking for longs, except I understand that the longs are going to also get flushed out. So then I'm going to look for vetted shorts to take them out and then get realigned with the long. How about this? Suppose you don't take the shorts, you just take the longs. You can do that also. And when you're building a trade plan, I look at it like a sequential process. If you can't explain the context and the specific setups sequentially, then you're not ready to move on. You see, it's a building process. And if you're building a career, just think of being a doctor or being a high performing athlete, because that's what you're going to end up being if you're going to be in this business, a high performer. You really got to step back from it and think, what do I do? Maybe get a good coach, whoever that is. Maybe find a good support group. I mean, we have that in the Trader Lab. Maybe find a process and then accept that it's an educational process and you don't get to a high level of performance without doing the work. You know, screenshots, replays, drilling down, correcting errors, getting developing competence. Consider you start out incompetent. And that's not to say anything negative about anyone, but you may be incompetent and think you're competent. But you might, if you don't have the metrics vetted, you can't even know. If you do the work, you may find that you're not competent, and that's okay. You know, we start out, and the problem I had when I came to trading is I tried to wrap my beliefs around trading when the real reality was I had to change what I believed to get aligned with what the reality of trading is, because you have no idea. What do? Read a book, go to a chat room? You think that's really trading? Well, maybe. Maybe some are. Maybe some pieces are, you see. But the reality of trading is it's a statistical, it's a math-based business in the end. It's, you know, all of this is random, you know. Does this trade from here go to here, or does it just keep going down to here? It could do that. You take a stop. That's overhead cost of production, and you have to know that. But it's over the large sample size what happens. So this, you know, this is the long. I think that covers everything. Any questions? And then remember, guys, I'm not a vendor. I don't have anything to sell, and I'm glad to help out. I'm just sharing what I do. You know, I don't think it's terribly complex, but then again, I'm not objective anymore. You know, but I've probably done almost everything you guys have done, in the sense of going down different rabbit holes. And that's just the nature of searching, you know, trying to find ideas. And the other thing that was very perplexing for me is I really thought things that I was doing worked, and when they really didn't. I just didn't understand that there's such a randomness. Um, Ron, I stream every day, Monday through Friday, 10:30 um, to 1 p. Eastern Standard Time. And sometimes I go a little longer. Lately, I've been doing about 2 hours, and I need to be respectful of other Bookmap streamers. You know, we have a number of different streams and traders that show their stuff. I'm just one way to kind of approach it. We have, if you're into stocks, options, day trading stock, Tesla, Microsoft, whatever the big ones, the high volume stocks, market maker behavior, options behavior, things of this. There's a lot of other education available, and of course, order flow. Using a high level tool like Bookmap to kind of integrate into whatever your process is. I found I started using Bookmap, I think, in either, I don't remember, maybe 2014, 2015. And it was rather basic. I mean, it was light years ahead of anything else, but compared to what it is today, it's not the same platform. It just keeps getting better. And since I've been able to really work with Bookmap, with bringing ideas to them and being beta tester and helping them with the development of their tools. Um, the innovation is just remarkable, and there's much more coming. It's kind of exciting actually, because they listen and their developers are just top notch. I mean, the stuff they come up with just is kind of mind-boggling. And I'm very glad that Bookmap recognized that I have something to contribute, and I'm glad I can contribute to them. And they're helping me. They're helping me with the tools they develop to get more, able to get into more micro structure and timeframes. Before, I'm doing the same process pretty much since I don't know, 2009 or 10 or something like that, maybe even earlier. But it was all based on a higher time frame charts. By higher time frame, short time frame relative. But this allows me to get more granular because I can read the behavior in a more micro structure. So what it did for me, besides the order flow and the other tools, is I can get my risk lower and get risk neutral quicker. What's the value of that? If you can shave ticks off, assuming you already have a process, that works, that's vetted, what is that worth over thousands of trades? And in a career, I'm going to tell you, thousands and thousands of trades. That's why instead of reacting to FOMO and being impulsive, if you step back and look at this as a business, your job is really to wait for your vetted trade, not to be concerned about the 20 pointer or 30 pointer that goes without you. If it's not your trade, going impulsing FOMO for that one trade type will put you out of the business. You see, you are accountable to your trade plan, not to the randomness of the market. Your job is to wait for your trade, and that's your job. Your job is not to throw an indicator on a 20-point move and think now that's the next, when that shows up, that's your job. It's not your job unless it has a positive expectancy. If you're not looking at the market that way, then you're kind of missing the point of what it is to be in the business of trading. And in the Trader Lab, it's about helping traders at least navigate the potential of becoming career traders. And it's not for everybody. It doesn't matter what kind of education you get. I mean, there are people who obviously want to be doctors and they don't become doctors for whatever reason. It's not the point. The point is the education is available if it can align with you psychologically. I mean, there has to be, it's like a rhythm. I kind of relate to this in a couple different ways. It's rhythmic. It's behavioral. The auction is the purest, in my opinion, again, the purest form of why the market exists. It's to try to figure out what is the S&P or whatever market worth. The participants auction to kind of come up with a fair price, and they do it at all time frames and fractals. That's why I relate to it. And then it's a matter of the dance or reading sheet music or speaking a language. Think about what it takes. It's the same kind of skill, you know, except it's represented by participant behavior. So that auction or participation of these individuals in the market are trying to figure out what is this thing worth, and they do it in all time frames, or I think of them as fractals, because the market's really not regulated by time. The market is really regulated by the participants. What do they think this is worth? Is this too high? Chop, chop, chop. Break. Pull back. Test the volume. Too high. Short. Right there. Fractal. Watch. I'm just showing you structure here. Right here, it was too high. Come back. Check. Break. Pull back to this volume. Check. Break. If you have a higher level of skill, and I don't recommend this for anybody, see the symmetry? Chop, chop, break, short, pull back, test, short. Could you be doing this if you have a high level of skill and you can read it in real time? It takes a lot of practice. Here. Are you seeing this? Now, I'm not calling trades here. I'm just showing you structure. It's not my job. Call a trade. It's not a trade calling room. This is for education. Chop, chop, too high, break, volume, break, pull back, where, volume, break, chop, chop, break, pull back to the volume, break, short, chop, chop, break high, pull back to the volume, long, up to where, to the volume, short, break, pull back to the volume, short. I'm only showing you reading structure. I'm not showing you anything else. I'm not saying or even trades. I'm showing you narration and how you might stay aligned. Adam, it's not about the moves happening fast. Adam's saying they happen fast. Adam, it's not right for you, then this isn't for you. It is fast. If you've been listening to the stream, I've been talking about what it takes to develop unconscious competence. These are not trades. I'm talking microstructure. Maybe you came in late, Adam, so that's okay. Jay, the pink numbers, this is the absorption indicator. I don't usually have it on. I thought I'd put it on for you. But this is the auction, so, but they're not trades. What this is how you navigate. One of the ways to use this behavior is trade management, but you have to vet it. In other words, when you see this, it's not a short. It could be if it's part of your trade plan. What are we doing? Mean reversion. Back to yesterday's high, exhaustion, mean reversion. That's what this is. This is the same trade that we had earlier. Remember? Right? The IB failure. Same trade. Rinse, repeat. It's not your setup. It's not your trade. But this is how you could read it, right? Um, so Adam, maybe not for you. That's okay. But the thing, Adam, is, and I'm speaking to Adam because if you just show up, you're this is advanced, Adam. But I do this the same way every day, and it's not. These are not setups. And if you follow the stream, you'll know exactly what this is about. So if you just dropped in, spend a little more time, or if it's not for you, then that's okay. I'm all right with that. Uh, but the Trader Lab is actually doing a lot, I think, to help traders. And the best thing to do is go to bookmap.com, join the Discord chat if you're not there. You don't have to be a Bookmap subscriber. Visit the Trader Lab, ask them how they're doing, you know. Um, and it's not for everybody. Um, but I've been doing this 43 years, so I think I have something to contribute. Well, Adam, don't take it out on me. I'm a nice guy. That's okay, Adam. Thank you. Jay, did I answer your question about the pink numbers? And I think I'm not scrolling here in the Discord. Sorry, guys. This thing was not moving. Whoop. Adam, getting squeezed. I have tire tracks that are indelibly printed on my back. Part of the thrill of learning and paying. I kind of think of it like a lot of the things we go through in trading is like paying tuition, for education. The thing that's most important, I think, in the trading business is trying not to repeat the class. And I can't tell you how many times I did derivatives of the same class and still got new tire treads on my back, thinking that I was actually doing something different, but it was really derivative. Different time frames, different multiple indicators, different this, different that. I mean, I started with oscillators when they first became available. And I know, since you might be new here, I shared an office with George Lane. He created stochastics. So I thought the Holy Grail showed up, you know. So, and when I started trading, it was classical bar charting. There was very little technical analysis at the time. You get your pencil and ruler out, did charts by hand. You know, so and I'm not. That's only to tell you that I've been down the path, so many paths that many of you are either still on or have been down, and even went into system development and used early iteration of what ultimately became TradeStation. And I was involved with Ralph and Bill Cruz down in Miami, and that eventually became Omega Research. So I have a story I can tell, but it's not really worth it, other than to tell you that I've probably done it, and or some forms of the things that we've all done, and I don't do it anymore. And it doesn't mean that it can't be done that way. I just the traders I know who are career traders, many, many, many of them, if they're not using automated high frequency approaches, which I know guys are, algorithmic traders. I know a lot of these guys, or a number of them, I should say, and not tons, because they're kind of in their own planet, quants, guys with PhDs in math and physicists who are our competitors in the retail side. I also know traders that trade like we do, who many of them are using processes built on the volume profile and auction. So I think there's a reason for that. And I'm not just speaking to you, Ed. I'm just sharing a little bit of my experience. And the reason Bookmap asked me to stream was because my experience, and also not only as a retail trader, but as a professional trader and money manager. So I mean, that's my background. I used to trade for firms. I had my own firm and manage dollars. So there's a lot more about me, but it's not important. You know, I still have the same things you all do. I still have to deal with my emotions because I'm discretionary. I'm not a system trader. The reason I went into systems, I was trying to manage my emotions. I wanted it to go on autopilot, and not so much. So anyway, just a little bit. Um, Jay is asking me to share my sensitivity. I adjusted, Jay, um, in IRT for those higher time frame composites. I adjust it so I just see what I need to see. I want to see the balance areas. So that's just how I adjust it. If it's too sensitive, it's going to throw too many lines up there, and I just want to see the majors. So that's all I do. You know, I don't know if I can put this up here without making a big mess. So this. So this was yesterday. Let's look at today, how it's fitting in here. So this is today. So this is that micro composite, that's 60 that I was talking about, right? That's where the shorts came off of this morning in the ETH and then early. And now we're over it and we're consolidating. Whoop, do I have everything here? Hold on a second. And we just touched yesterday's high, you see, and we're inside. So we might just pick these guys off and then just stay here or continue higher. I don't know. And you asked me about the sensitivity. This is what I want to see. These are the consolidations. This is the same as the chop chop in the microstructure. There's your high volume, you see. There's the low volume outside edge, high volume. This is the highest volume for this whole consolidation. That's why it's important. And then it goes into fractals down to the little microstructure. It's all about the volume. And then that volume point of control migrates around during the day. It's the same thing. This is retail for all of this. So we're in balance here. That means, we like this price at the moment. Yeah, let's get those stops out. Nah, we're not going in here. So, you know, and this, if you think about it, what is this? Down, chop, chop, chop. This might just be a flag developing, which would take us down lower, maybe to here or down, So I'm still leaning, I don't know what it's going to do. By the way, I never know what's going to happen. I just have levels of potential behavior and I keep my mind open. I mean, back when I started, I used to think I knew what the higher the low of the day was going to be. I mean, how ridiculous is that? But you don't know because nobody tells you. At least nobody told me. I was in fantasy land. And I didn't have the advantage of education when I started. Basically, it was buy a book. And I could tell you how good those were. Not so much. I did find that when I went to CME and took classical bar charting at CME, that was very useful. But then that was also somewhat, a head and shoulders, all that. But it was, very useful. But I don't really look at the market that way anymore. I don't draw a trend line. I don't need a trend line because just any of you ever draw a trend line and then move it. That's just another term called curve fitting. So here we are. Inside out. So that's why this is a short back to the mean, wherever the mean is. That's this. So it's two-sided trade, right? So you could see, remember, short, 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 short. Now, it has to be part of your plan. Remember what the key piece was. Yesterday's high and exhaustion. That's context. And and again, I got to point out, if it's not part of your plan, it's not your trade. And it's more advanced because you're fading. So how do you stay in alignment? If this, then that. If not, then what? Here's another piece. This. 80. This is how Bookmap helps also. Let me show you a little bit of this. Now, none of this stands alone in a vacuum. You know, Bookmap to me is a piece. So I want to see, now we're having rollover and it gets really, it looks like a checkerboard. It always annoys me. Like this. See this? Bing, 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 bing. This is all automated. And you only see it during rollover. Well, I don't know about that. But here you see the order book come in. You see it trailing it down and they're pulling. Think of this like pressure or the tide, and the tide's going out. They pull, they push. It just gives you some sense of what's going on. Notice how this comes into the book. You see the reaction? That's order flow. Now, Bruce does order flow webinars Monday, Tuesday, and Friday. I think it's 10 or 9 I'm forgetting. Eastern Standard Time. No, sorry. 10 Eastern Standard Time. I'm losing my mind. I don't even know what time it is. And he'll give you the insight on the behavior of the order book. And it's very useful. Now, this is funky because of rollover, but basically, you'll be able to see the book flip. You'll see algorithmic behavior. Algos are not our friend, but you can't trade with algos because they're computer generated, you know, so you're not trying to do anything. And they're also designed to fool us. So algorithmic behavior will mess you up. So you have to look at more meaningful behavior. One of the things I've found when I have triggering structures, my triggers often, not always, often lead the algos. They might be also triggering off of the structures I use. They might be using similar behaviors. It's just something I've observed. I have no real opinion. It's just maybe coincidental. But notice what happens. This is the trigger here. And now the book starts coming down. You see, right here. I don't know. And under here, they pull. Here, it's coming down. So I don't know, you know. Over here, we come up, we have a trigger. They start coming down, but it's always behind, it seems. So what I'm looking for is, if this is a triggering structure, break, pullback, I'm looking for the test. It can come back and test at a different place, you know. And remember, horseshoes and hand grenades. And where's the stops, right? This is another IBF, by the way. I'm here chattering away and I'm not keeping everybody in. So you have shorts coming out of here. You have this is our, remember our IBF? Break, pull back to the IB. Rob, are you on this trade? Where is it? Can't tell. If you took it here, let me see, do we have a short here or not? You might be short here. You would have a scale and you get taken out. When it breaks under the IB, that's a short. Here, break, pull back, stop pick, high volume right here, potential short. And then you're going for this and then VWAP in mid because that's where the stops are. Yeah, that's your IBF. Is everybody tracking? I'm sorry I missed that one because I was busy, you know, kind of talking a little bit. I heard you're asking me about Wyckoff. I really don't have any opinion about him. He's volume oriented. I think, you know, but I don't think about Wyckoff anymore. But he was way ahead of his time. I think he really hit the nail on the head. And if you want to think about, go back even further, Jesse Livermore, um, he also will give you some insight. I think the dollars are not in the short-term trades because it's a risk-reward process. I think the opportunity lies in the swings, but it's a personal preference. In other words, if I'm putting risk on, you know, here, you know, remember, 2-lot minimum configuration, get risk neutral, put your helmet on. So this is a short. This was a short over here too. You get scaled, you get taken out. Put the trade right back on again. Boom, scaled, risk neutral, stop stays up here, target, and then target, and then developing value area low and back to 60. So this is the extended target on the short. It doesn't have to ever get there, but these are primary. Why? Stops, and then you could be done with the trade. It doesn't matter, but that's a decent trade. 62 at around 60. And I'm sorry, 72 ish, 70 to 60, 10 points. I'll do those all day. Okay, Rob, we won't hold it against you. Rob says he's not on this one. Any questions? Guys, all this is process, rinse, repeat, narration, understanding potential context, waiting for your bus to show up, putting your helmet on, and having vetted metrics so you have the confidence to execute, and taking the randomness of the market rotations as just what it is, random. Thinking like a casino because you have a vetted trade plan. If you don't have metrics, if you can't open to a setup and say, I've got X% probability of getting risk neutral, and then I have X% probability of getting to the first target, not the third target, the first target, and that's your trade. And your job is to, when that trade shows up, is to execute it. The hardest thing you're going to find, other than putting in the time and not being in a hurry and being disciplined, is actually trading, actually doing the trade when it shows up, because that's going to be the thing, or you're not going to continue trading when your trade shows up. You'll get passive, and what it is subliminally you don't want to give back your profit. That's an obstacle also, and you may not never think of it because you'll rationalize it. That's the thing about trading. The casino doesn't close down the table because they've had some winners that day and they're ahead. Their job is to keep the table open, keep the gamblers gambling, and keep putting the work in the odds and increasing the metrics. We all have things that are going to be obstacles for us in the business of trading. The business of trading is really stepping in and understanding your weaknesses, having the discipline to keep trading. One of my things is I have to get my brain screwed on straight when I'm going to trade, because if the first half hour of trade I can be up, let's just say substantially, or the first hour, and then I'm going, well, it's been great, and then for whatever reason I start getting a little passive, and then there's one trade I don't take, and it's a big winner. You know what it does to me? It scrambles me. Then I go, gee, I should have had that winner. So if the next one's a loser, now I'm only, you know what I mean? And all of a sudden, my mind goes into this, like somebody put the brain on the spin cycle, and it takes me out of the game, because now my mind has hooked into you shoulda, and now you can't take the next one, because if the next one's a loser, you won't have that last winner to buttress. Do you know what I'm saying? I found that in my own behavior, and I didn't realize it at first. At first, I was logical. Well, look, you did so well. But you know what the reality was? My job is to trade, because that's my business of trading. My job is to play those metrics that I've vetted, not to have some subliminal fear of loss pop up and rationalize not continuing to trade when I'm in alignment. I mean, there's days I trade and I'm not in alignment, and it's not me, it's just my plan and the condition of the market don't align. Those are the days where I have cost of production or overhead. The only way I'm going to get my statistics to play is by keeping trading when my job is to trade. And I have risk management in place. I take a certain amount of stops. If I take them, that's cost of production and overhead. I have a loss limit. If things go totally off the rails and I'm not in alignment, I'm done trading for the day. It happens. I don't like it, but then I have to look at my trade plan and go, yeah, that's part of it. Okay, tomorrow, you know, that's reality. So I have to guard against these things I'm not conscious of, and that's part of the wiring, the mental state. So when I sit down to trade for the day, I open up my trade plan, and part of it is get your brain screwed on straight. Here's the things that derail you, you know, here's the things. And in order to quantify it, by the way, I created something called an error cost calculator. So when I don't take the trade, I write down, what, the outcome of that was. If I don't take a trade that loses, I put that against myself, not as a negative. I actually put it in as a cost. because I'm supposed to take that trade. And I add all those up at the end of the week or the end of the month. You do that for a few months, you're going to find you might be a profitable trader, and it's all sitting on the table that you've left there, you see, because you close down the table and your job is to be at the table, being the house, being the dealer, working on the metrics. You see the edge. And so what I found, and here's the other side of what I found, if I was losing and out of alignment, instead of waiting patiently, I started getting FOMO and what it was about, and I started making more errors because now I was at the opposite end. I was trying to make it back. And I didn't understand this until I kept metrics. And then I saw this repetitive behavior, and it was really a shock to me because I wasn't conscious of it, you know. And this, so that's why I created the error cost calculator. And if you haven't done that, like I say, you're going to find out, write yourself out a check. So let's say your errors at the end of the week or the end of the month are $5,000. Write that check out and stick it on your monitor. That'll give you some motivation. You got to quantify these things. Anyway, I hope you find that useful. Jay is asking me if Bruce's videos are on YouTube. Yeah, they are. They're all up there. And I recommend you watch them if you're interested in order flow. He covers order flow and also order flow setups and things like that you might find useful. Mine are not. I have selective ones I put up there. The last one I think I put up was just from a few days ago, maybe, or maybe last Friday. I can't remember. And that was day trading a trend in fractals. What you're seeing me do here is trade fractal. So that's, and all the term fractal means is instead of multiple time frames, I'm really trading structure, not time. And there's a difference between, I mean, I used to trade time, like you guys, 15-minute, 5-minute, whatever, and pick whatever it is. Renko, range, tick, doesn't matter. It's all the same price. Um, you know, but that was time because I broke it up by time because we all learned the same thing. Then I figured out at some point the clock really is irrelevant. It's the participant behavior that really is what we're looking at. And when you put the clock, it superimposed the clock. The clock, we created the clock. The market is not based on the clock other than open close, ETH, that kind of stuff. EU close, which have some impacts on volume and things, and of course open close. But other than that, the clock is immaterial. Lunchtime, we often see counter rotations. That's material. In fact, when I first was looking at the IBF, I had a different name for it. I called it the K trade because I was trading market profile, and that was K period. It was lunchtime in Chicago. I think 12:30, if I remember right, Central Standard Time. So I called it K trade because at lunch it would thin out and you'd get counter rotation. So initially it was really more of a lunchtime trade. And you can kind of see right here, we get into lunchtime and what do you have? The IB. See? So that's when I first came up with this. I was really I just kept noticing behavior. And when the market thins out, it's easier for the market to counter rotate, and the stops are the fuel for this trade. And there's two ways we use the IBF, by the way. First of all, it's for this. And the other part is to get back in alignment with the higher time frame, which is long. Now, I don't know if this thing is done. I have no clue. But what it is now, remember the target was the developing value area low? Anybody remember that? Right? And remember, horseshoes and hand grenades. So it's a potential long to here and back to here, or not. But these are all part of what we do in the trader lab. And if it doesn't come to where you want it to come, you don't have a trade. But just remember what I was saying. What's the target, right? So I'm just showing you what I do. And there's no precision. Here's the other part of trading. No precision. It's maybe. So there are areas. This is an area. Look what happened right here. Does that give you some insight? Look you see what I'm saying? So if you're looking for the long, and I'm not saying it is long, I'm saying it's an area. You can get there. What else is an area? 60. If it's not your trade, there's nothing to do, and you don't pull out a gun and hurt yourself. It says, your trade plan says it's got to come here, and or here, whatever it is, you don't have a trade. No problem. If you're more, let's just say, limber, you would see this as a potential trigger, and this is an obstacle right here. The shorts, where did the shorts have their stops? The mid and the VWAP. So what might happen? Rotate here, see sellers. We get through here, back here, and maybe back here. Don't know. That's what trading is, right? That's all it is. And it's maybe. So again, if this isn't your trade, it's not your trade. No fault, no problem. If you can read this and you know where the confluences might be, and you have the book, then it might be a long. Your job is to get risk neutral ahead of the first obstacle. This dropping down presents a problem. So you might just go, if you were in this, you'd look at this drop down, you'd get risk neutral, and then maybe you'll scratch the trade. Or you just leave it. What's the difference? Stops are here, and this is a potential target. Price check in aisle 3. Remember price check in aisle 3? I got to put up a variable high volume node there. So I put these up because they're showing me where the highest volume was. And I also have this marked. This is automatic. So this shows me where the high volume is. In this whole thing, this shows me the high volume in the microstructure. Because what this is the chart-based volume profile. It's only showing me the volume that's on the screen. So I can see the fractals, you see. This is what I really like about it. This is showing me all the volume for the day. So you can see it there is this, but I can also see it here more cleanly. So just a way to look at it. So where's the stops? Here. So this can fail from here, no problem. The thing in the Trader Lab, remember, and let me show you the triggering structure. And this is not a recommendation. I'm just showing you structure. Because if it's not your trade, your job is not to do it. Remember, it's not the impulse, because which one is the right one? Was it this one? See, was it this one? Is it this one? Which one is it? See? So no trade, but I want to show you the behavior. So let's see if we get up here. Y stops, and it doesn't have to do anything. If we take this out, potentially back here or not. What can we anticipate? Potentially sellers at the VWAP, stops at the mid, sellers at the VWAP. This moved up, potentially too low. We want to watch the behavior if we pull back, and it can still come down here. That's the randomness. Questions, guys? Well, Captain Price, I know you want to be confident, but I'm not confident in any one trade. I am confident in the metrics. I can't be confident because I've never been able to have anything more than maybe. And part of what I did early on was put more indicators on, and I was trying to squeeze risk out so I could, quote, be more confident. And for me, I'm just talking about me, less fearful. What I've figured out over time is I have no way of knowing the difference between a trade that works and one that doesn't, other than when the dust settles. So instead, the way around that for me to develop the confidence was to accept the randomness and then just put the trade on and manage the trade and get risk neutral. Being able to have a high probability of getting risk neutrals would help me develop the confidence. The outcome of the trade is random, So, and full stops are part of that too, So but I could never get confident in randomness. I am confident there is randomness. So that's kind of where my confidence is kind of shifted, and losses are cost of production. I'm just responding to your comment, by the way, because I understand what that's all about. Just saying. Are you guys tracking with me? Do you have any questions? I've got about 9 minutes before I'm required to go off the air and go back and do my thing. By the way, if you're new here, I want to invite you to the Trader Lab. There's 60 PDFs of these behaviors you can download. You're going to see the same process over and over and over. I don't reinvent the wheel and I don't make it up as I go. But what I do is I always start, when I do this stream, especially because I'm starting 2 hours after the open. It doesn't do anybody any good to see what's happening right now until you know what happened, because everything that's happening in the present is based on what happened, you know, from the ETH, where real and actually higher time frame. Yes, so yesterday, let me take that back. Higher time frame, yesterday RTH, ETH, which is most recent auction with statistics, overnight high, low, overnight volume, point and control. So we have that as reference points. The overnight high and low, there's over 90% probability one of them gets taken out during RTH, not 100%. And then the IB high and low, first hour high, low, over 90% probability one of those goes. Two of them can go too, but it's a lower probability, right? Um, Yesterday's trade was, and those of you in the Trader Lab, I, you know, by the way, these streams are available to Trader Lab participants exclusively, unless I post them, and leave them up on YouTube, which I do from time to time. The last one that I left up there that you guys can find was, I think, last Friday, and I don't remember. I can't remember because I just don't remember. Was trend trading in fractal, so you can kind of see the same behavior in directional. Yesterday was directional that went into rotational, kind of what today is, similar processes. So whatever we did yesterday, we're doing today. Same. Once you recognize the context shifts. So we're trading in a fractal, so direction is up, and it's rotational, so it's outside in, but also so it's outside in, leaning to the north side, which might be done because we already got our targets on top. We are trading on top of a higher time frame retail price balance, so that's what we're doing, two-sided. This thing might be done to the upside or not, so it's two-sided trade. That's called mean reversion. So we're trading inside and up with two-sided trade, so it's rotation. If you can kind of see that, and that's what's called context, and I'm not saying it's the easiest thing to figure out. You can segment the market and then attempt to get in alignment. You don't have to be trading the short side. If you want, you could just be trading one side. You have to be conscious, though, that we took out yesterday's high already and we've come off after the stops. That's the narrative. So if this, then that. If not, then what? If we take out yesterday's high and we don't take it out, go further, and we come back in, then what? Then mean reversion, the longs get taken out. Then what? If the buyers perceive it's back on sale, they'll come back in, and then we'll rotate back up. Where to? The IB. We come back in the IB. What happens? The longs get taken out. If we come back to the outside edge and we think the market might be biased to the long side, it's a long, then where to? Back inside. If we can't get going, then what? Then the longs under here get taken out and we continue lower. Kind of that. That's it. Or you're done. You order your pizza and your pint of ice cream and you're ready for tonight. One or the other. That's the business of trading. And if you don't have a trade here, then you have nothing to do. Here's an important piece. VPOC and mid are overlapping. That's called balance. That means two-sided trade. And remember, our outside edge is still out here. Don't know. This is why this is in the middle of nowhere, right? I'm not saying you can't do anything with this. I'm just saying it's not a setup we talk about in the Trader Lab. So let's watch. Any questions? And by the way, if you're interested in Trader Lab, I invite you to come. It's let's just say, a serious community of like-minded traders, whether new or you've been in the trenches for a while. Our senior trader has 54 years experience. I sit at his knee and he teaches me. We all got something to contribute and we all have something to gain, seriously. And there's no egos in the Trader Lab. We're all in this together. And the goal of the Trader Lab is to methodically build a trading business, a career in trading, not to play a game. It's not a video game. It's a business. If you have not reached the level of success you're interested in, or if you're in Trader Groundhog Day like I was, doing derivatives of the same process that doesn't work, I invite you to visit the Trader Lab and see if you can, garner some benefit from it. It's not for everybody. It takes a commitment, and you have to understand the reality of becoming a top performer or competitor in anything. Whether you're going to become a doctor, you're going to be an athlete, think about what it takes. It's no different in trading. You got to put the time in, and you got to accept the fact that you're going to you're going to walk before you run, and prefer actually crawl before you run, because this is different in the sense of understanding ultimately the purity of the market and the market itself, which is participant behavior. Go to bookmap.com. You'll see a link. Join the Discord chat. Um, Go to Trader Lab. There's 60 PDFs you can download so you can look at this behavior and see if it makes sense to you. None of this comes quickly, but it is methodical. And if you follow these streams, you're going to see me do the exact same process. Because to me, the only way to have consistency in anything is to do it the same way, especially if it's a high skill level endeavor. This is a high skill level endeavor, but it's a simple process. The skill comes from developing the unconscious competence, and that's the practice aspect of it, you know, and specializing actually in setups and then building on top of it, building on top. Notice where we went here. Coincidence, maybe? Could be. Don't know. See, this is part of the process of trading, and all of it's random, except maybe some of it isn't. I appreciate you guys visiting. Um, and I invite you to the Trader Lab. You don't have to be a Bookmap subscriber now, ever, never. Uh, there's a lot of education, stocks, options, market maker behavior. The Trader Lab's not a trade calling room, though I do narrate as best I can in real time, but I also do my own thing when I'm not streaming, because this is, my income. It is derived from the business, as you know, not from streaming. I'm not a vendor. So, but I'm passionate about trading, and I've seen so many good people come and go in the trading business. And unfortunately, you guys now have the internet. I had nothing when I started, so I had the opposite problem. You have the problem now of so much input and probably a lot of garbage that you can't sort it out. Maybe coming to the Trader Lab will help you maybe sort some of it out. And again, what I do or what we do in the Trader Lab is not for everybody. There's not one way to trade, okay? But in the end, it's the way that you can wrap your head around and create, no matter what it is, metrics that give you the confidence and see this as a business. It is a business. If you want a business, create a business in trading, it's going to take you time. There's no shortcut. There's no cliff notes. But I think if you come to an environment with other traders who are like-minded and are leveraging their collective experience and sharing how to create trade plans and sharing their trade plans, how they put these pieces together, it might help accelerate your growth, and maybe you can realize your potential in the business of trading. Anyway, that's all I have to say for you. I want to wish you guys a good weekend. This stream is available for review for all Trader Lab participants, and if you're interested, go to bookmap.com, join the Discord chat, go to Trader Lab, and also take advantage of all the additional free education. Any last questions before I fold up the tent and pull the plug and go to the, well, I'm not going to go to the beach, got to do some trading, right? What's that? Do I over the line possible? Overall, yeah, every day Casey's asked me if I have plays. Yeah, I have a whole list of setups that are all contextual, and once I recognize context, I'm on the trade. That's basically my job. Yeah. So everything is in advance. I don't make it up as I go. It's all done. There's 60, Caleb. So I think you might be in the wrong place. If you didn't find them in the Trader Lab, just ask. Okay. Hope you got something out of this. Go to the Trader Lab, just ask where they are. Introduce yourself, let us know where you are. There's members in the Trader Lab from all over the planet, and I appreciate you guys coming and visiting. Say hi. I do my best to kind of help in a sense, but I get a lot of the same questions. So everybody, there's a lot of the same answers. The questions you have, we all had, including me. Developing value area low, location. Where to? Watch. Here, here, potentially back here. Not a recommendation. Watch how this plays out. And also, potentially out here. Not a recommendation. We're all tourists. Thanks for visiting the Trader Lab. See you guys Monday. And I'm going to put the process up that we do, the hierarchy. This is what we do in the Trader Lab. This is what it's built on. Auction market theory. how the participants interact. What's too high, what's too low, what's retail, in fractals. Volume profile lets us see the volume, and that's the key piece in all of this. Where's the retail price? If the retail price is too high, the shoppers or the participants go elsewhere. What time frame do we operate in? I prefer to get the 10 and 20 point swings, but I use the micro time frames to interact with the participants. What's the context? Is it directional or rotational? How about it's directional going up and rotational in a shorter time frame that we participate in? And then Bookmap is the order flow tool. I call it the tip of the spear, where we can get down to the granular level. Thanks for visiting the Trader Lab. Look forward to seeing you guys next week. If you got something out of this, hit the thumb up in YouTube, and I look forward to seeing you guys next week. Also, there's webinars available up on YouTube if you're interested in them, and this is available for review for this stream today for Trader Lab participants. Thanks again. See you soon.